Hi traders. Today we have a basic indicator and strategy created by the internal team of TradingView. Stochastic Slow is one of the basic parts of many strategies, but today we examine the performance of the indicator on its own. A very popular oscillator loved by many traders to complement their strategies and offer confluence on the exact entry or exit point when they determine the direction. The strategy page of TradingView for this strategy includes also the calculation information that I omitted. So I read. The Stochastic Slow Strategy indicator is a specific type of price oscillator that is able to compare a security's closing price over a certain range, N. It is typical for a trader to set the slow stochastic indicator with a range of 14, however, this can be decided upon by the trader, with proper analysis depending on their wants and needs. The Stochastic Slow Strategy ranges from 0 to 100. If a stock rallies, the stochastics therefore cannot continue to make higher highs past the 100 mark. In addition, the indicator has boundaries and limits, just like any oscillator. With this in mind, traders understand that the indicator will never truly be able to mimic the price action of a security to AT. The main takeaway from this is that the oscillator and subsequent stochastics will continue to follow the trend in the primary direction, which is all it needs to do, technically speaking. When analyzing or searching for oversold or overbought signals, traders should be aware of the indicator's signal meaning. If a stock happens to cross over 80, many traders believe this is the right time to sell, and similarly, if the stock crosses under 20, it would seem like a good time to sell, right? Well, the indicator doesn't necessarily point towards oversold and overbought levels, rather it advises traders to view the signals as trend strength or trend weakness. When determining what specific signals mean, keep this in mind, along with other methods of trend analysis. The Stochastic Slow Strategy focuses more on the highs and lows over a period, more so than closing prices. This is something that sets apart the oscillator from the Relative Strength Index, RSI, indicator. This can also be determined by the calculation formula, where the indicator specifically analyses period, N, highs and lows. For this reason, the Stochastic Slow Strategy indicator has smoother results and fluctuates more frequently between overbought and oversold signals. Although the indicator does a great job of projecting extreme levels in the market, it can be frustrating for users to receive constant signals and readings for overbought or oversold stock. Traders may at times get sick of the constant alerts and notifications and may choose to abandon the indicator altogether in order to manage their positions with less noise. The indicator can be managed within its settings, but it is ultimately up to the individual trader to decide whether or not this indicator will be right for them and their trading goals. Summary. The Stochastic Slow Strategy indicator is fantastic for identifying and determining primary trends within the market. The oscillator analyzes period highs and lows in order to track trends and deliver overbought and oversold signals to the trader. When combined with other indicators used for technical analysis or trend determination, a trader will be all the more set up for success. Leading the information page, we go to the results and we start with the screenshot with all the results to see first the OGN USDT at 4 hours with a profit factor of 3.047. The net profit is not huge and you can sort based on your own needs. For me, the profit factor is the first indicator I use to sort because it clearly says what you give and what you get. Moving to the Forex category, the first entry is GBP CAD at 15 minutes with a 1.435 profit factor. The net profit is similar to OGN, but this is a lower time frame. Don't disregard that Forex, indices, and metals have a huge backtesting database because they trade for much longer than cryptos, especially the ones after the Bitcoin era. With limited backtest data, the statistical sample is weaker. Now let's move to indices and metals. The first entry belongs to AU200 AUD with 3 minutes time frame. The profit factor is 1.334 and with it's impressive that this low time frame came first. Second, in the same category, you can spot gold within the same time frame too. The strategy looks like it's very compatible with the low time frames of this category. I would suggest grouping the results with a profit factor over 1 and extracting stats regarding the percentage of low and high time frames. I can do it, just let me know in the comments. For this category of indices, I see 46 pairs with minute time frames and 27 with hourly time frames. I think it's okay to go to the ranking spreadsheet now. Well, as you can see, the strategy didn't go at the bottom or at the top, but stuck in the middle with the 6th position with 10 strategies in total. The average percentage rate of 64.20 is the best number we see in this strategy. The rest are not so good, but the worst of all for me is the new low record we have at the Sharpe ratio. Let me say something before you put this strategy to your mind as bad. In elephant trading strategies, we try to create filters and see on average the attitude of strategies around the internet. The average means that it may excel in one point or crawl in another. For example, the first strategy had a tremendous profit factor that created an overall high profit factor and put it first. This doesn't mean that it's the only strategy you should try. You saw before that produced excellent results in indices with low time frames. What I want to say is that there is no bad strategy or divine strategy, but here we try to find consistency and stability. The real holy grail of traders. If you have anything to say or suggestions for the current strategies or strategies you want to test, do let me know in the comments. Remember, finding an edge to your trading and applying proper risk management and psychology is the recipe for success. Thanks for your time. Sincerely, the trading elephant himself.